Hey there, everybody. Welcome to my YouTube channel. This is Colleen with Remax Action First. And today I have got a special guest on. I am so excited. This man is absolutely amazing. We actually met, and not even in a real estate related deal. We were both volunteering at our church at this great warehouse. But Brian is absolutely amazing. You're going to see how knowledgeable he is, and we are going to be talking about the cost of waiting for first-time home buyers. So please welcome Brian Heckman with the Brian Heckman Group. What's up, Brian? Thanks for joining
Hey,
me.
what an awesome introduction. I wish you could like introduce me to my family like that. That would be great. I would love that. Yeah, so I think the
Thanks.
big thing that we talk a lot about is you hear a lot of these things of, hey, real estate prices are really high, rates are really high, insurance is high, everything is high with inflation. And so I just kind of go into like, well, who is buying and why are they buying right now? And so I believe this kind of this little video evolved over just you and I having this discussion. And I'm big on just sharing stories of other people. And so in the mortgage space, our thing is it's no longer about just doing a pre-approval and a rate quote. It's really about helping people understand the math, the mathematics behind real estate. And in this space of like, one little example, and what is the cost of waiting? And so I have a real good example of somebody that was in the $281,000 price point. That's the price point, first time buyer. And what they need to have the payment that they want, they would need an interest rate of 3.25%. It's just not happening.
Not now. Mm-mm.
That ship has sailed, right? And so a lot of times, for first time buyers out there, what I say is, that's like me wanting to buy Apple stock today but on the prices of 1984. And of course, that's foolish. We can't do that. So at the end of the day, what we talk with about people that are doing this is what is the cost of waiting? What does it look like? And so my big thing is just like talking through numbers. And a lot of times I'll have people write down numbers because when you see the numbers on paper, we've got some great charts. So Colleen, what you're really good about doing is having your people go through this analysis of an actual cost of waiting specific to their scenario. But just like our first time buyer at $281,000 price point, she's priced herself out of the market waiting for 2 years. So
Right.
what that means is every time that she's ready to buy, she waits, and then home prices continue to go up. And now the homes that she was looking at that were 300, now those homes are 310 or 315, and now like the numbers just change. Then rates go up, and now all of a sudden she's at 280. And so at the end of the day, we had a phone call actually with her parents on a three-way call, and where we landed was you need to do this now because if you wait, this home's going to be 310 to 315 if we wait. So
Right. And you
instead
know
of
what? Yeah, let me interrupt here for a second. For the viewers, we are in Tampa, Florida. Okay, we're not in, some random area. This place, everybody is moving to Florida, and Tampa is becoming the new Miami. So what I'm finding, Brian, is that a lot of people are waiting, they're hoping, oh, there's going to be a crash. Well, they said that 3 years ago, but it's not happening. I mean, we can't even compare what's going on now to what happened in 2008 and 2009. This is nothing like that. This market, I mean, the home prices are going up, and I do not foresee them coming down by like some great amount. And like we were just talking a few minutes earlier, we really don't know what the rates are going to do. The rates could go up. So again, being in the greater Tampa Bay area, I do not foresee these homes getting any cheaper than they are today. We are recording today in April of 2024. But anyway, so I just wanted to let you know that, or let our viewers know, where we're at, what we're talking about here in the market. Now, your specific buyer, what area were they looking at? In this area or
Tampa, yeah, Tampa Bay.
yeah, Tampa. Okay, yeah. So you were saying,
And it's well, the big thing with that, and you have some information you can get the viewers on the stats, the metrics, all the numbers, and the actual truth, not just statistics, but the truth of the market right now today versus the market leading up to 2008. There's no inventory out there. So most neighborhoods, there's not a plethora of for sale signs like there was leading up to 2008. we have record amounts, historic amounts of home equity right now. That wasn't the case leading up to 2008. We've had impeccable, pristine borrower profiles on mortgages since 2009 when everything kind of like settled back down. Leading up to 2008, all toxic mortgages, right? So everyone's had to put money down on properties since then. Before then, we were doing 125% mortgages for people with bad credit, no income verification. Very different. But let's go through. Can I just share my screen real quick?
Oh
Is that
yeah, go
possible?
ahead. Yeah, let's see here. Let me do this.
I'm just big on visuals. So for your viewers, I'm just going to show a little chart here, hopefully.
All right, I'm gonna go ahead and give you permission here. Okay, you should be good to go.
All right, let's look at here. Okay, so what we do is we run through, you can see this little chart in the screen, right?
No, yes, now I can see it. Yep,
All right, math of real estate, right?
yep.
Awesome. Okay, that got too big. So here's an analysis that we pull through from our loan system for people. And Colleen, you're really good about understanding. Give me a second. This will refresh and get back down to size. What we do is, for example, we're going to take somebody at, in this case, a $400,000 price point, and we're going to say, hey, if the appreciation is just 3% per year, what does this look like if I were to wait for a year or 2 years or 3 years just based on a 3% appreciation of the price?
Hmm.
And so what most people don't look at is um, most people are going to be looking to, excuse me, isn't that the worst when you have to sneeze and you can't stop? We're real people around here, right?
That's all right. Yep.
Most people are not going to buy or sell in 1 year. So everyone gets focused in on the news media and the narratives of what home prices are doing appreciation each month, month to month, year over year. But what I
Hmm.
always try and help, especially first time buyers, think about is you're probably going to be in this house for 2, 3, 4, 5 years, somewhere in there.
Hmm.
Almost certainly, you're going to refinance the mortgage within 12 to 18 months, is what all these forecasts say.
Yeah.
But here, if we look at in red, at 3 years at a 3% appreciation with a starting price of 400,000, that home is now worth $437,000. You have $37,000 in appreciation. And then one thing we're also having to really help first-time home buyers, especially understand in the market right now, is in the event that they have to spend a little more money to win the offer. In this case, I just use an example of $10,000. If you had to spend an extra $10,000 at a 3% appreciation, you would have $37,000 in equity growth after 3 years. That's 371% return on investment on spending the extra $10,000 to win the house. Now, I've been doing mortgages almost 23 years, and never before would we ever say you might have to spend $10,000 more than what the house is worth. Now, all of a sudden, where markets are so many neighborhoods are just inventory starved, there's only so many houses to go around, and there's a whole lot of people vying for those houses.
Yeah, especially if you're looking for something specific like no HOA or no CDD. I mean, oh my goodness. I mean, we're having that problem still today in 2024 in Carrollwood. I mean, I have a buyer looking in this area and it's tough. We're still getting multiple offer situations. And if it's a decent house, yeah, you still might have to pay a little extra for it. But as you can see by the math, if it's what you want, you might as well just get it.
Yeah. And then, we always run through when we do this is like, what would it look like if you refinance and rates are a 1% lower, 1.5% lower, just so there's a mental gauge and a visual on what is the payment going to look like. But you know about this, like this Parents Plus mortgage program is an awesome program to look into for first-time buyers or parents that are looking to help their kids. Payment relief options are a huge, huge thing. Creative financing, bridge loans, all these different things are out there now to ultimately help the home buyer be able to navigate the market where rates are high and insurance is high and costs are high and everything is high. There's still people that are winning. And so the key thing is like just looking at the data here is that The people that are going to be really happy and smiling are the people in a year or two or three that own the house and are able to refinance, lower the payment, lower their costs, but are not having to go and, fight with a bunch of other buyers who are now in the market because rates are lower and home prices
Right.
continue to go up.
Yeah. And I know you have different creative programs. You've got all these different, programs. You've been doing this for so long. You're going to be able to work something out. So guys, if you're watching this video and you're thinking of buying a home or instead of renting, now is the time to do it. If you are in the Tampa Bay, greater Tampa Bay area, let's get you something right now before all the homes are going to appreciate, as Brian just showed you. And yeah, you're still going to be paying more. But anyway, I'll let Brian handle that, and he can do it's a free consult. Well, it's a free consultation, and you don't have to
Mhm.
even pull their credit, right?
Correct. Yeah,
Right
most
away.
people we don't pull credit. Let's just have a conversation, right? And figure out the
Yeah.
math of this before we even burn time and money and all that stuff on doing all that.
For sure. All right. Well, thank you so much for sharing with us. And I know if you're watching, we have some other videos. I'm going to have another video as well on this YouTube channel about bridge loans. So those are for those people that already own a home and they're looking to buy after they sell, but there's that gap. So Brian is going to be talking about that as well. And if you have any other questions, I'm going to have his information in the comment section. So look in the description. Brian, what's the best way to get a hold of you? Email or phone or?
Office line, is it also a text line, right? 813-749-7776. 813-749-7776. Text message is a great way to start.
Okay, that sounds good. All right. And I think anything else you wanted to end with that
That's
maybe we
it.
didn't cover? Yeah. All right, guys. Well, thank you for tuning in. Thank you so much, Brian, for joining me and educating our viewers about the cost of waiting. All right. We'll see you next time. Subscribe to this channel and like this video, comment, and let us know what you think or if you have any questions. Bye-bye for now.